Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Good morning, Will. How are you?
I'm doing all right, coming out of I guess kind of the holiday season lull, the dizzying phase that is. So hopefully you had a good holiday season.
I did, and Happy New Year. Hope you had a
Yep,
good New Year.
happy New Year.
My New Year tradition has quickly become sitting on the couch and watching football for like 4 days straight. Uh, yeah, it was a beautiful weekend of football. So
Oh yeah, we had a lot of great college football games. We were just talking about Tulane USC. Tough break for your K-State Wildcats, but they have a lot to build on moving forward.
yeah, I have three teams that I follow: Ohio State from my time there, Mizzou from my degree here, and I work here, so I love Mizzou football and grew up a Mizzou fan, and then K-State because my undergrad's from K-State. All three of them made a bowl, great. All three of them lost, but we're looking ahead to 2023 and basketball season. K-State and Mizzou are playing some good
There you go.
basketball, so and Ohio State's ranked now, so
Yeah.
tough loss for Purdue. I don't know if we get many Indiana viewers on here, but I was watching a little bit of the Purdue basketball game last night. I think Purdue's good. I think Purdue's gonna have a good basketball season, but just a tough break last night. So
No, it's it's only January. It doesn't matter until
yeah, it's only
February into March, right? So you got time, you got plenty of time.
I also got some painting done inside my house
Yeah.
last week. Let me tell you, I am at the point where I'm ready to act like an economist and substitute capital for labor. I do not like painting. I should have hired that done.
Well, does it look good at least?
So we painted the wall one color and
It's
decided we
starting to
didn't.
sound like no.
Yeah, well, so we painted the wall, we painted the whole room one color and decided we didn't like that color. So then we painted it all again. So it got painted twice.
Twice. Wow. Yeah.
And we like the new one.
So that's good. Some back and forth on the paint. Maybe some back and forth on the markets too. Let's dive into those. What kind of adjustments have we seen now coming into the new year?
Yeah, for sure. So kind of just a flat week, low trade volumes here over the holiday season. New crop corn, or excuse me, old crop corn for March up 3 cents to 6.76. December corn was flat on the week. January at $6.06. March soybeans were up 34 cents to 15.23. November new crop soybeans were up 5 cents to 14.11. Soybean oil for March was down a penny and a third to 65 cents. Soybean meal was up $17.20 to $465 per short ton. Old crop wheat for March up 6 cents. New crop July wheat up 5 cents to 7.97. And then that West Texas Intermediate crude oil was down 74 cents per barrel.
So looking at the adjustments there, what really led the way? What were the key highlights?
It was just, it was an odd week, right? Because of kind of everything was off, and we started off with a day off at the beginning of the week for that Christmas break. But U.S. ethanol production was down again, kind of to end out the year. So kind of a luggish into the calendar year. We fell below 1 million barrels per day of ethanol production. That was the first time below the 1 million barrel mark per day since early October. With the lack of use, the decrease in production wasn't enough to overcome an offset, or the decrease in use to keep stocks steady, and we saw increased ethanol stocks. Export sales pulled back again week over week. Corn was slightly up from its 10-week average, while soybeans were well below their recent volumes, and then wheat exports were strong and then exceeded all expectations. So that's all I've got this week. Everything else is pretty much trivial for the start of the calendar year.
Yeah. Always good to see those wheat exports being strong, right? So
yeah, and it's something I think we'll watch, and I think it's something that we'll see as we start looking towards this new marketing year. Well, it's the current marketing year. We're halfway through the marketing year already on wheat, but wheat exports are something that we could see more U.S. wheat being exported, just kind of with some of the other challenges around the world. I think the big ticket item there, if I can jump ahead, is Russia had a mammoth wheat crop last year that really kind of helped alleviate some of the pressure in the global wheat markets. It's hard for me to see Russia having that big of a wheat crop again. Certainly not out of the question, but certainly, it's hard to see that again. And then with all the production challenges that we're seeing in other parts of the world, I think it's really going to make our U.S. wheat crop, especially the winter wheat crop, this coming out of the ground early June, late May, I think that's really going to make a difference in the wheat market as we look ahead to 2023.
Well, and that kind of teases what we're going to be talking about today. Really looking ahead or looking into now that we're in 2023. What are going to be the big ticket items? What's really going to be dictating the market? And a lot of the factors that we talked about last week, kind of highlighting what happened in 22, they're still going to be around, obviously, in 23. Russia, Ukraine is still going to be a major point of interest. Fuel prices are still going to be driving the market. And things like weather always are important. But really, you talk about Russia, maybe not like it not being likely that they have that same type of crop back to back years. So really, if they don't run into that big of a crop, how much more does the ongoing conflict in Russia and Ukraine matter if you see that production be limited?
Yeah, sure. So I think it just continues to tighten world feed grain markets, wheat, corn, grain, sorghum, barley. I think we continue to see tightness in those markets out of that region. Then it's going to come to other places around the world to kind of fill that production gap. The good thing, and I do believe this is a positive. I know a lot of U.S. producers don't view this as a positive, but the good thing is that there are many primary wheat growing regions. It's not just the Black Sea. We've often talked about the U.S. wheat market has kind of shrunk to the point where we're not the preferred buyer for wheat in the global markets, because you've got Canada, you've got Australia, you've got places in South America that can produce wheat and help fill some of that void. So it really, the tightness and the challenges that we see in the Black Sea really kind of increase the importance of wheat production in some of these other regions. If we see continued dryness in South America, that's going to tighten that wheat market, and especially that feed grain market. And then it comes to the United States and Canada, specifically Canada. But again, they grow a lot of wheat that's produced or harvested later in the summer. Where our wheat would be able to come, our winter wheat especially, that we see here in the Western Corn Belt, Kansas, Oklahoma, it comes onto the market earlier, so there might be a little bit more demand for our wheat, our winter wheat crops, just given the timing of when everything's happening. And wheat has many stories and many classes, and the classes of wheat are used for different things, and so there's only so much substitution you can use for different things, but certainly they're all tied together. And so I think there's the opportunity there for winter wheat to really, help champion some of this early summer, market movement. So.
Yep. So a lot of opportunities kind of sitting out there right now for farmers, like you said, in the like Kansas, Oklahoma area, especially there. Looking outside of wheat, because I don't want to, spend all day here, but what are some of the bigger factors in your mind that are going to be really pushing the market this year? I know we keep talking about South American weather and how important it's been, and a lot of this dryness last couple growing seasons has really put a damper on their production. Do you see that maybe changing? I know it's hard to predict the weather, right? But eventually
Well,
that's
weather,
got to break out of that.
yeah, weather should always be at the top of the list for anything when it comes to markets. I'm not even going to joke about that, but yeah, weather's a big deal. I think if I can tie this into something that we maybe can make a little bit more tangible as acreage battles, both here in the United States and then around the globe. We're looking at a very strong increase in soybean acreage in Brazil and South America. I think to tie that onto the weather in terms of how things kind of materialize here the rest of January into February, maybe even early March, determines how big that second crop corn becomes. And really it comes down to if it's wet and rainy, it's going to delay that soybean development and push that corn crop even a little bit further back than what we normally see. You start getting worried about frost and other things, and really frankly pushing that second crop corn into their dry season. And so I think the weather here is going to impact the acreage battle down there. They're seeing they've got large acreage of soybeans. I can see them producing, more corn acres in that second crop than what we've seen in the past, and I think we will see that. Let me turn this to the United States for just a second and think about, winter or our acreage decisions that are coming up here. The producers are probably making already decisions, and in some cases have already bought inputs for the 2023 crop, whether that's fertilizer, seed, chemicals, what have you. But I think we're going to see some acreage battles here in the United States where again, we run into this situation of a very uncertain price future. And I'm probably more concerned about a price cost squeeze at the back end of the 2023 marketing year into 2024 than I was in 2022. That would signal that you move towards a less risky crop like soybeans that have lower input cost, more stable yields, or less variability in yields. But if you look at the margins right now, corn certainly is favored over soybeans in most of the Midwest. And so I think we're going to have an acreage battle. It's going to lead to some, as we head into that March prospective plannings report or planning intentions report. I think there's going to be a lot of interest in that report this year, as
So,
always, but certainly, acreage battles here.
so really simply put, you're more concerned about the likelihood of inputs, being continuing to be high, but those prices that farmers are getting to maybe come down a little bit and kind of get that squeeze in the market. You're more concerned about that coming into this year than you were last year.
Yeah, for example, I got my first ARC and PLC question. I had a farmer text me last night, was asking, what should he do for, ARC and PLC decisions, and I thought, I put a lot of thought. I've been putting a lot of thought into this, even for my own farm. And I really want to see what those crop insurance guaranteed prices are in February this year, because I am concerned on the back end, and I certainly think that those crop insurance price guarantees could push some people to think about SCO coverage, especially for corn, as we head, and grain sorghum as we head into 2023 election cycle. So,
Yeah. Yeah. So
let me throw
definitely.
a couple other things out there. Can I throw a couple other
Yeah. Yeah.
things
No. No.
there that I think are unique, but certainly things to watch as we head into 2023? High interest rate environment impacting how farmers treat grain storage. This is not something we talk about a lot because in most cases, farmers don't account for opportunity cost. It's a fancy term that economists use, but basically it means what we're giving up to do something else. There is opportunity cost in putting grain in storage, and that comes from the physical storage cost of putting up a grain bin or paying the commercial elevator to hold your grain, shrink, damage, mechanical damage, but then also this concept of interest expense. And basically what it means is if interest goes up and you have grain in storage, you're not paying down an operating loan, or if you don't have any loan, you could use that money that you have in the bank and put in some type of an investment account that generates a return, right? So by just putting grain in storage, it has an expense to it. And because soybeans are priced, $15 per bushel versus $6, $6.50 a bushel or whatever, soybeans command a higher interest expense per bushel than what corn does. And so it tends to push more corn grain storage than soybeans. So I think that's something when we think about local basis, I look for interest expense. It should. I don't think people tend to think about this, but certainly, I think we could see some impact on basis. Another thing, I don't know if you have any comments about that, Will,
Well,
but
I was just gonna say, so basically what you're saying is you're tying up money, you're tying up capital into an area whenever, potentially you could be better off just having that liquidity, that flexibility to move that in different areas instead of just really, kind of forcing yourself to be stuck in this market.
Sure. And I see this being a bigger impact for this crop coming out of the field this summer into this fall, right? I don't anticipate we'll see as much storage as what we have maybe the last couple of years, because that interest expense and really just physical storage costs, I think, going up. So I think that'll impact basis markets and maybe change some marketing plans for producers. The other thing that I think is very important as we head into 2023, and especially here over the next couple of months, is soybean oil extraction rates. And so as we crush soybeans here in the United States, how much oil we get per bushel of soybeans has been low as we've kind of started crushing this new, the 2022 soybean crop. Does that improve? Does it remain low? I think that remains telling, but certainly that's going to have big implications for that soybean oil market. If we continue to see soybean crush, oil extraction rates on the lower side, that's positive for soybean oil. But then on the other side, the soybean oil market kind of got overbought a little bit in relation to expected demand from renewable diesel. I still think that's coming, but certainly when we got EPA's, kind of expectations or the renewable volume obligations, there wasn't anything in there that was unexpected to the positive side, if that makes sense. Like there was nothing bad in there that changed the direction of where we're heading in terms of the soybean oil and renewable fuels market, but certainly wasn't anything different to the positive side, like a positive shock. And the market was anticipating that. And we've seen the kind of the deterioration in that soybean oil market. That could counter out some of these low soybean volumes. But I certainly think as we continue to head into 2023, into this summer, we're going to see soybean oil extraction low, and that's going to continue to prop up soybean oil markets.
Yeah, and then just to clarify real quick, just on that overbought those soybean contracts there. So really you could just see those come back down in price just a little bit, just because maybe they went higher than the market really dictated they should have been.
Yeah, sure. Basically, I think money managers are going to sell out of their positions, and as they sell out of their positions, that's going to put a little weight in the market. We've already seen it to some extent. I think we got a little bit more to go, but so I think we've got some bearish outlook in the short run on the soybean oil market. But I think as those lower soy oil volumes come into play, expectations kind of stabilize. I look for this summer into the fall to see high soybean oil prices again, or a better fundamental picture on the the bullish side for soybean oil.
So Ben, can you say soy oil for me 10 times fast?
It's hard to say.
So I feel like we've covered a lot of topics in depth there, and that I really enjoyed the conversation. Obviously, there's more things that are going to be impactful to the markets in 23. Again, those input costs, those fuel costs, maybe watching the river levels, see how much the soil gets recharged with moisture here over the winter months are definitely going to dictate a lot of the early parts of the growing season. But Ben, as always, it's been a pleasure having you on here with me this morning. Viewers, listeners, if you'd like to learn more about what we do, you can do so at brownfieldagnews.com. Also, check out our sister program, the weekly livestock market update, on brownfieldagnews.com. I'm Will Robinson for Brownfield.